Massive losses for individual traders and a negative sum game in terms of F&O trading for the traders in the market is what the summary of the report on F&O trading activities in India revealed by SEBI on 23rd September 2024. The insights are quite significant because the profit and loss dynamics among individual traders from FY 2022 to FY 2024 indicates massive losses for individual traders. 93% of individual traders lost money in the stock markets between 2022 and 2024 financial years. A striking majority of 1.13 crore unique traders incurred net losses amounting to rupees 1,81,000 crore over 3 years. And the average losses wise, each loss-making trader, which accounts for 92.8% of all traders, lost around 2 lakh rupees. And heavy losses for top losers. The top 3.5% of the loss makers faced an average loss of 28 lakh per person. Not just that, the market is a negative sum game between 2022 and 2024 for traders because of high transaction costs. Trading in F&O has proved to be a zero-sum game because of high transaction costs. Costs such as brokerage fees, exchange fees, and taxes consume 25% of profits or add to the losses. Over 3 years, traders collectively paid 50,000 crore rupees in transaction costs, with brokerage fees being the largest component of the total transaction costs. Further, as a trend, algorithmic trading is dominating the F&O trades. Proprietary firms and foreign portfolio investors using sophisticated algorithms were the primarily profit makers in FY24. Individual traders using algorithms, however, also suffered losses, indicating that merely employing algorithms is not enough for profitability. Now let's look at options versus futures. Option as a poison pill is spreading the poison quite steadfastly. Options trading dominated the market with 94.2% of traders trading only options and 90% of traders lost money despite a 50% rise in the overall market. When compared between options and futures, futures performed slightly better. The small minority of future traders, that is to say 5.1% of the future traders, performed better on an average, suggesting that trading simpler instruments like futures can be advantageous in certain market conditions. And the most surprising thing is losses across different trader profiles. Here, for losses, capital size doesn't matter. Losses were consistent regardless of the amount of trading capital, debunking the notion that wealthier traders or those with more capital would fare better. Traders from smaller cities suffered more. 70% of traders came from cities beyond the top 30. These traders faced larger losses compared to those in Tier 1 cities, highlighting a geographical disadvantage in terms of market participation. Well, at this point of time, we may ask one thing: who are all the beneficiaries of the rising market trend? And also, the vibrant F&O market, for whatever be the reasons India is known for having such market, who are all the beneficiaries in the market? If we want to take a deep dive into that, the startling facts are proprietary firms were beneficiaries to an extent, and foreign portfolio investors or FPIs are the most significant beneficiaries of the Indian markets to a large extent through algorithmic trading. FPIs utilizing high frequency and algorithmic trading strategies were the biggest winners in FY 2024. The leveraged quantitative models, arbitrage, and trend following strategies helped them in consistently making profits. Whereas proprietary desks and FPIs, though dominated the picture in terms of taking profits, but the proprietary firms' profits were not so high when compared to that of foreign portfolio investors because proprietary firms lack the benefit of access to sophisticated tools like data and technology. The second most beneficiaries from the vibrant market are the brokerage firms in terms of transaction costs collections. Brokers earn substantial revenue from 51% share of transaction costs in F&O trading. These costs included brokerage fees that traders paid on every trade, irrespective of whether they made a profit or loss. And the transaction costs is not a small sum. All in all, it's 50,000 crore rupees in transaction costs. Over 3 years, brokerage firms, exchanges, and other participants collected 50,000 crore rupees in total transaction costs from individual traders. And then the third beneficiary of the vibrant market is NSE and BSE in terms of collecting fees. Exchanges collected 20% of the transaction costs, earning a significant portion from facilitating F&O trade. Every trade on the market adds to the revenue of the exchanges. And then the fourth beneficiary is government via taxes in terms of tax revenues. The government collected 29% of the transaction costs in the form of various taxes, including securities transaction tax, STT, goods and services tax, GST, and other levies on trading activities. So, most of the beneficiaries of the vibrant F&O market in India are the players on one side, that is the FPIs with sophisticated algorithmic tools, and rest of the beneficiaries are the brokers, exchanges, and the government. And the ultimate loser of the entire vibrant F&O trading in India is the retail investor. The retail investors' losses to the tune of 1.81 lakh crore are the gains of the FPIs, along with whatever be the kind of brokerage that they paid, whatever be the fees that they paid to exchanges, and whatever be the taxes that they paid to government. So, all in all, our Indian retail investors lost substantial money in the name of F&O trading. So, markets rising, vibrant F&O market, indexes are gaining substantially, yet in trading, the retail investors are substantially losing. Hope the information is useful to you all. Thank you very much for your patient hearing.